Gold as a safe haven play has helped the metal push to multi-year highs and see its best performing start to the year in decades. But will investors keep falling for gold's allure? Joining us now is the CEO of US Global, Frank Holmes. Frank, good to have you back on.
It's great to be here, and yes, we're in a secular bull market in gold, and most people don't believe it.
Well, let's look at gold this morning. It was up $10, and then within 10 minutes, it dropped. Is this still a good time to get into gold, or should investors wait it out here?
Well, historically, this is the month where you get a great correction buying opportunity, but it appears to be this continuous buying, and we've witnessed major hedge fund managers, highly respected, all talking about gold as an asset class, especially at the hedge fund conference last week in New York. The GLD continues to see record money pouring into buying bullion. So I think this is very positive, but the big factor is this negative interest rates globally. We're talking about $24 trillion of negative rates and the impact it's going to have on pension funds. So you're seeing money diversify itself into gold.
All right, Frank. So I'm sensing that you still strongly feel that investors are still flocking to gold. But for how much longer? Do you not think that this bullish sentiment should be worrisome?
Well, because historically, yes, because of the month of May is usually a correction, a great time to buy, and bottom in June. However, what's different is that the world is fighting slower growth, and central banks are trying to reflate their economies with negative interest rates. And the process that they're doing it is creating uncertainty, and gold is becoming the asset class to own.
All right, Frank, what do you make of the news that the ICBC Standard Bank will purchase Barclays Gold Vault in London? Some major news here coming out of China.
Well, we've talked about this many times of the tectonic shift taking place of bullion, big bricks leaving, going to Switzerland, being refined down to smaller bars and showing up in China, and then China turn around and creating Shanghai as a focus place for where they're going to price the gold, because they've always been price takers. Now they're price makers, and now going back to London, having bullion as I guess a safe holding place, rule of law in London. So I think it's very significant in this tectonic shift taking place for China becoming a global currency, supported and backed by gold.
Well, is this a positive shift, Frank?
Absolutely. It's remarkable, isn't it, that London was the price makers of the world, and now it's Shanghai, and now they're showing back up in London, where they're going to store their bullion, in addition to bullion being stored over in Asia.
All right, Frank. Well, what's your touchdown pass going to be? What are you buying that could really move gold this week?
CPI numbers are coming out tomorrow, and I think that that's a key factor, as so many different types of funds that look at inflation will re-ratchet their positioning and thought process for gold against inflation coming.
Thanks, Frank. And thank you for watching. Stay tuned. We are looking at gold's technicals next with Jim Wyckoff on Kitco's Gold Report.